Joining us now is Frederick Mishkin, former Federal Reserve Governor and currently an economics professor at Columbia University. Frederick, great to see you. What crossed your mind when you saw this PPI number this morning? How much of this is clearly tariffs, and how much does it complicate the narrative that, well, the Fed, of course, has to cut in September and then will continue?
So I don't put a huge amount of weight on a PPI particular number. It's very volatile. However, even before this, I'm a little bit less sure about a cut than the markets are. The inflation numbers, the core was not so great. Yes, the headline was a good number, but the core wasn't great. And I think a key issue is the context, which is that the Fed is right now dealing with a situation where they've made some past mistakes. Inflation is still above the target. And also, there's a real threat to their independence. And in that context, it makes it a little bit less likely that they want to cut unless they have really very strong reasons to. And as long as the unemployment rate is actually at a number which is really very close to full employment, if you look at things like vacancies relative to unemployment, it doesn't look like we're in a situation of where inflation is going to be coming down a whole lot. So all of these things, I think, give the Fed pause. I think normally, if they had a one-shot deal on something like tariffs, they would actually be more likely to look through it and allow the inflation to rise a little bit. It's much harder to do that in a context of where you made past mistakes, inflation got out of control, you have an administration that's really pushing hard on you to lower rates, and that threatens independence. And so in this context, I think the Fed actually has a little bit higher bar than the markets think in terms of cutting rates.
Okay.
So, I think that they could be overestimating what will happen in that regard.
Rick, it's good to see you.
Good to see you too, Steve.
Yeah, it's been a bit.
Love you, baby.
Thanks, man. I've been making a point, and maybe I'm out on a limb and crazy about this, that the Fed is playing a role in keeping a lid on some of the inflation that's out there, and that it's doing some of what it has to do to make sure that tariff inflation doesn't become broader inflation. That the idea that tariffs are a one-time price hike is something that is determined by the Fed having the right policy amid that one-time price shock.
So I agree with you. I think a key issue here is that it's always thinking about inflation expectations.
Right.
That's really one of the key things that the Fed is really worried about. And in this particular environment, they're very worried that inflation expectations could rise. And that's particularly because of all the geopolitics, everything that's going on is a little bit crazy right now. And I think this is one of the reasons why they're actually less likely to say, oh, this is just a one-shot increase in the price level, and we can look through it. So I agree with you on this, that the kind of thinking you're thinking about here is actually similar to some of the issues that I've been concerned about.
But the Fed is not going to, John, I'll just throw this out, it's not going to go into a meeting where it's not going to cut with a 93% probability on a rate cut. Something's going to give somewhere along the line.
Either people's expectations
the Fed chair is
going
to come up and he's going to green light the cut, or he's going to push against it and the data is going to push the market towards the Fed, or the data will push the Fed towards the market. We're not going in with 93 with the level of rhetoric that we have right now, which is very split.
Because you don't want to wake the baby, right? You don't want to shock the market.
Right.
Fred, I wonder to what extent transshipments and that narrative within tariffs this time mean that it's taking longer to assess what the full impact of tariffs might be for businesses to understand exactly how the prices are changing of various components and what they can afford to pass along. And so it's going to take a while for the Fed even to understand what it might need to do?
Yeah, I think that also that what's very unique about this situation is it's a huge change in tariffs, and also a lot of uncertainty what the outcome is going to be. So I think that this is and you can also see that firms were very much able to front load a lot of importing before these tariffs take effect. And that means it takes longer for the tariffs to actually cause prices to rise. So I think that's a key factor here. We see that in the trade numbers where it's very clear that people are shipping a lot of stuff over here right now in order to avoid higher tariffs. And that doesn't avoid the problem of tariffs in a longer run context. particularly because it doesn't look like Trump is going to keep tariffs lower than expected. He's raised them, and he's very consistent that he's going to do this. And if anything, maybe if he gets into fights with people, they could even go higher. So all of this is such that it's going to take longer to assess the impact of tariffs on prices.
Yeah, he didn't like that taco thing at all.
No.
Frederick Mishkin, thank you.